Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today's the 18th of January 2019. So welcome everyone, welcome to this Friday's morning session where we're gonna have a look at the markets, a few charts, the usual stuff guys. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, let's quickly jump into the charts. Now, the first one I want to look at is the Shanghai composite here, and I was talking about this one this week, and basically I was telling you guys to keep a close eye on this little range that the index was trading in. So that was on the downside. The lower bound of it was at the 2,532.75, something like that. So in a way we could put it as actually 2,533, something like that. So on the upside we did have the 2575 level, so which kind of got broken today, and you can see that the index managed kind of to push higher here, and now it's kind of staying here above it. So certainly this increases the chances of seeing maybe further acceleration to the upside here, where we could then aim for the 2645 level, which was marked here by the highs of the 13th of December last year. So and also it's called coinciding here with this 100 EMA shown here as the green line on the daily chart. So that's why guys, for now certainly the momentum is here still to the upside. But again, if this, let's say, suddenly drops below the 2,575 level, and well, this is where we're probably gonna enter a more of a cautious stage and a more neutral, take a more neutral position, because this could increase the chances of this one traveling back down here towards this low here at 2,533 level that I was just mentioning. But in order to kind of start considering much lower levels in the near term, we're still going to wait until this drops below the 2,533 level, and then we'll target the recent lows here that we saw in the beginning of January, in the first days of January. But for now, the downside is slightly off the table. We are looking quite positive at the moment. Let's see if the index manages to reach this key area of resistance near the 2,645 level, and if it does, well, we'll just take it from there and see what it wants to do further. If it wants to break this and push further up, or actually this is going to act as a nice resistance, and maybe we'll see a bit of a correction here back down. But for now guys, yep, the momentum is still to the upside, so let's see if it continues next week. Jumping into gold. Now, gold is a bit of an annoying commodity or precious metal to trade in and to be in right now. So looking at this daily chart, of course, you can see for the past, well, for the whole week basically it's kind of moving sideways here, but to be honest, it would be probably better to look at the 4-hour chart on this one. So basically this is what you can see guys. For those who are trading gold, it's a bit of a frustrating asset to be in, and basically what's happening here is that it's, in a way, it's coiling up. So we can see that we do have this little triangle formation here. Let me just kind of actually, let me just drag it a little bit lower here in order to kind of see it better. So this is what I'm talking about, and of course probably for those who are trading this commodity, this precious metal, have already noticed that. So this is what we're seeing here. We're seeing this coiling up here within this triangle formation, and of course we're still going to remain neutral for now, even though it's now trying to point up higher here. But the problem is it's currently getting held by the pivot here, which is near the 1292. So keep your eyes on this one. If this decides to push higher and we start breaking this upper side of the triangle, then well, of course you probably understand what could happen. We could see maybe further acceleration to the upside here. Of course, the target that I'm having here on gold is around the 1308 level, approximately around that level, guys. Just because looking at the daily chart, it is, you can see that this is the area, this is a very nice strong area of resistance that we had here back in May last year. So this in a way could get a test, but of course it needs to overcome a few key important other resistance areas slightly lower. Of course, the psychological 1300, and of course we do have this little area that kind of I have it marked here from the last year, and that was around the 1302.50. This marked the opening price of last year. So some, like I said, some good potential areas of resistance here above this upper side of the triangle. But again, before we can start considering these areas, we need to see the break of this upper side of the triangle first. On the same kind of idea, same strategy applies to the downside. The only thing is here, probably you should be a little bit more on the cautious side, because if this drops, the price drops below this lower side of the triangle, certainly keep your eyes on some of these key areas of support. Actually, let me just get rid of this one because we need to adjust this slightly. This is what I'll be looking at first here, and this is going to be around the 1287 level, something like that. So this is of course from a very short-term perspective, guys. So in a way, if we do get a nice drop here below this lower side of the triangle, for a better confirmation of the downside, wait for a break below the 1287, and this way we could then target these recent lows that we saw here back in the beginning of January. That was near the 1279, something like that, approximately there. But still keep your eyes on this little let me just adjust the chart quickly back up. Keep an eye on this little upside support line. In a way, I do understand it could be a bit of a tentative one, but still we could see the price slowing down here near that upside line, and this upside line has been running here from the lows of the 28th of November. So in a way, if we're going to connect these two lows here, this is where exactly the 1279 level comes into play as well. So this could be a nice potential area for a bit of slowdown, and then of course if it wants to continue pushing further down, yep, we'll start looking at much lower levels. But for now, let's play it short, let's play it simple. First, continue observing this little triangle formation. Jumping into EURGBP now. This one, looking at the daily chart, you can see that it's getting killed here for the past week, and even actually if we jump into a weekly chart, you can see how strong this bearish weekly candle is. Certainly, of course, it found its support yesterday near the 0.8775 level, something like that, approximately there. This level was marked here by the inside swing high of the 12th of November, and now the pair is trying to get back. Well, actually, it's already back above it, but it's trying to kind of retrace a little bit more. This is going to be very interesting to watch today, because if this continues to drop further down here, now certainly we are going to be aiming for these lows that we saw here back in November, and the first potential area of support could be seen around the 0.8695 level. Just slightly below that, we do have the 0.8680 zone, which was marked here by the lows of the 26th of April 2018. But again, in order to kind of see this, or just, let's say, see these levels, we need to see another good strong move lower here on the daily chart, especially here looking at, well, in other words, we need to see another a strong bearish daily candle here to the downside in order to kind of reach these levels. So that's why I doubt that we could reach them this week. Maybe something for next week, but probably today we could see a bit of correction here back to the upside. Now keep your eyes on the 0.88 level here. This is going to be the first potential area, good potential area of resistance. It was last time it acted as a nice area of resistance right here on the 2nd of November, where it held the rate down. So in a way, this is what we're going to target first. But if this fails to withhold the bull pressure, we could see maybe a slightly bigger retracement here, and the next potential area that we're going to be keeping a close eye on is the 0.8825 level. So guys, be very careful with this pair. I mean, it sometimes has a mind of its own. So for now, like I said, be very cautious with this one. Let's say if the pound starts, pound had a good rally yesterday. So if we see a drop in the pound, then, well, I mean, we could see and the pair, and let's say the euro stays where it is today, then we could see this one, like I said, retracing back up a little bit here and recapturing some of its lost grounds. So for now, be very cautious with this one, and let's continue observing the price action. Jumping into EURJPY. Now this is a very interesting pair, a very good one, and looking at this daily chart, and you probably understand what's happening here already. So basically, we had this little short-term downside resistance line which got broken, or in a way yesterday it got broken, but then the daily candle closed still below this, but today we already opened outside of it, and in a way naturally kind of broke it to the upside here. So basically what we're going to keep on monitoring here, of course, some of these we're going to be targeting some of the higher levels here, so higher potential resistance areas. And let me just adjust this level right here. So this is the first area that we're going to be looking out for, is the 125.10 level, approximately there, guys. So it was marked here by the highs of the 9th of January, but if that doesn't hold, well, further acceleration to the upside where the 125.35 level is. But to be honest, if these two kind of get violated very quickly, then this could be opening the path towards the 50 EMA here, which was marked here by the red line, or even actually going a little bit further up here towards towards this area of resistance near the 127 level, maybe just slightly above that. But again, for us to see that level here, the 127, we need to see a nice good pop above these two areas of resistance here, so the 125.15 and the 125.35. so in a way you could kind of actually wait until this gets above the 125.35, and then you could start targeting higher levels. If in case this, let's say, travels a little bit higher but gets rejected, let's say near the 125.10 level, something like that, and we see the bulls kind of struggling to push further up, this is where it could become interesting, to be honest, because the bears might step in here and drive the pair back down towards a retest of this downside resistance line from above. But if the selling momentum is going to be strong, if this suddenly drops below this downside resistance line again, well, this is where the bulls could start abandoning the field in general, and more bears could start joining in, and we could see maybe another slide lower towards these lows that we saw here back in the first days of January near the 122.55 level. So keep your eyes on that one, guys. For now, long story short, basically we are kind of trying to push higher here on the euro yen. Let's see if we manage to reach the 125.10. If we do, then, well, from the kind of more of a longer term perspective, we need to see a nice good break above the 125.35 in order to kind of consider a further longer term move higher. On the downside, well, it's the downside resistance line that we're going to be keeping close eye on. A drop below this could increase the chances of this one traveling back down towards the first days of January lows. And the last pair I wanted to show you quickly for today, guys, for this morning, USDCAD. Now certainly this will be heavily monitored today. We do have the Canadian CPI figures coming out. So you can see that currently it's kind of stuck here between these two levels, the 132 30 level on the downside, and on the upside is the 133 zone. And if we jump back into the 4-hour chart on this one, so basically for the whole week in a way this pair has been kind of moving sideways, so probably waiting for today to maybe to make a big move. Let's see of course if that happens, but that's why we're going to be very cautious on this one and just going to observe the some of the key resistance and support levels. So on the upside we're going to keep on monitoring this 133 level. A nice good pop above this could open the path towards higher levels. This is looking at this 4-hour chart, you can see this is where we will aim for the R1 initially around the 133.15, just 15 pips away from the breaking point, this potential breaking point, and of course we'll aim for the R2, which is around the 133.50, which also is not far from all these 100 EMA and the 200 EMA. So this could be a potential good area for a test. Of course, keep an eye on it. Let's see if it actually reaches that. But if this decides to drop further down here and drops below the 132.30 level, well, brace yourselves. We could see maybe a decline towards these lows that we saw here in the first half of January near the 131.80 level. So good potential area of support. But if that doesn't hold, yep, further declines are possible. But then again, guys, for now we will try to play it safe. We'll keep on monitoring this area of resistance right there around the 133 level, and this area of support here near the 132.30, and be very careful during the news release. Okay guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me later on in my traders tea time, and that's 14:15 GMT time. But for now, I hope you have a fantastic trading day. Bye for now.